Yeah, so good afternoon and hello everyone and welcome to this presentation by MT Højgaard Holding. Some of you might remember MT Højgaard for the last time that we had the Investor Days. It's Denmark's second largest construction company. The company has three divisions: MT Højgaard Denmark, which is the primary construction and infrastructure building company; Inga Petersen, mainly focused on renovation, but also construction, and then finally the smaller project development units. And finally, the company is also divesting its international operations, which I guess Rasmus Untidt, CFO, will touch upon in this presentation. The share is up 64% this year, and this is mainly due, as I see at least, to the strong financial performance, which is large. An artifact of Rasmus Untidt, which has been with MT Højgaard for 10 years, but the last 18 months as a CEO. So with no further ado, Rasmus, the floor is yours.
Thank you so much, Peter, and thank you, ABG, for giving me this opportunity to present today. My name is, as Peter said, is Rasmus Untidt, and I'm the CFO of MT Højgaard Holding. I'll start the presentation with a brief introduction to the group and our investment case, followed by an update on our strategic transformation to become a leading player in the construction industry in Denmark. I'll then focus on our core business in Denmark and provide a snapshot of current trading as well as our key focus areas before taking your questions. Please turn to slide 2. Slide 2. MT Højgaard Holding is a Danish construction. Go back to slide 2. I think you're on slide 3. Yes, thank you. MT Højgaard Holding is a Danish construction group with a history dating back to 1918. It's been involved in a number of landmark construction and infrastructure projects over the years. Today, our group is comprised of around 3,000 employees and 3 business units focusing on the Danish market. MT Højgaard Denmark is our largest business unit, covering construction projects, civil works, and infrastructure. Our other large business unit is Inga Petersen, covering construction projects and holding a strong position within refurbishment and a solid foothold in building services. The third unit is MT Højgaard Property Development, which is focused on developing, specifying, and realizing sustainable commercial and residential projects. This is our Danish core business, which has grown profitable for 5 years in a row now. In our view, this makes MT Højgaard Holding an interesting investment case in a market that has been impacted by COVID-19, inflation, interest rate hikes, and low visibility. We've been around for more than 100 years, and we are on track to deliver the 6th consecutive year of growth and improved profitability in our Danish core business. We have successfully navigated COVID-19 and mitigated the impact of our industry of severe economic shocks in the wake of the pandemic and geopolitical turmoil. We have delivered solid performance while spending considerable resources on building a new, leaner, and more focused group. These efforts have included several divestments in Denmark and abroad, as well as restructuring our core business. We have seen good results from these efforts, and we are taking important steps to sharpen the group profile. Our key competences and core focus areas are well defined, and we have established a unique position of strength in carefully selected parts of the Danish market, which are less sensitive to macroeconomic volatility. We are continuing this path to drive stable performance and reduce risk exposure even further. The strategic target is to become a pure-play construction and civil works company with a leading position in the Danish market. We see interesting perspectives and growth opportunities for our business units and a strong outlook for MT Højgaard Holding. And we are pleased to report that we have built a solid foundation for pursuing these opportunities through sharp focus on our cash flows and balance sheet. Let's flip to slide 3, please. Thank you. In October 2023, we decided to focus exclusively on our Danish core business and wind up our international activities. This means that the international business is now classified as discontinuing operations. We made this decision to streamline our business and ensure that we are spending our managerial and financial resources in areas where we have a competitive advantage and prospects for even further profitable growth. Since the decision was made, we successfully divested RTS contractors in the Faroe Islands and left this market. We also sold part of our activities in Greenland, focused around the Thule base. And we are pleased to receive approval from relevant competition authorities and the first installment payment for the sale of SET with activities in Africa and Portugal. We are awaiting the final bank guarantee and look forward to closing this deal as well. With the progress made so far, our international activities are now limited to Greenland. We are still in the process of divesting the remainder of our activities in Greenland while finalizing the last remaining projects. It's an airport in Nuuk expected to be handed over in second half of the year. Sale processes are ongoing and we are seeing interest from potential buyers. We still expect to be able to have the international business wound up during 2024. Let's turn to a brief overview of performance in the Danish business. Slide 4, please. We reported our Q1 figures last week under the headline of continued profitable growth, based on 6% revenue growth and a 69% EBIT growth from the same quarter last year. Performance was in line with our ambition of growing earnings faster than revenue, and we were pleased to continue the positive developments highlighted on this slide. The solid traction in recent years has been secured in a market impacted by several shocks, resulting in no overall growth in demands currently. Still, there are pockets of growth in the Danish market, and we are well positioned to cater to these areas. We remain focused on delivering profitable growth and executing on the winding up of our international activities, and we are pleased to have a strong order backlog. Let's take a closer look at that on slide 5, please. Looking ahead, we see a strong order book which grew to a high level during 2023, based on several small and mid-sized orders combined with a few very large orders. The order book has since declined since the all-time high last year. This was expected as we do not often book orders in the billion kroner range every quarter, and because we saw several orders in tenders and partnership agreements being pushed into Q2. This includes an 8-year partnership agreement with Siemens Energy announced yesterday, comprising of expansion and renovation of the electricity grid in Western Denmark. At the end of Q1 2024, the order book stood at 12.5 billion Danish kroner. The order book is comprised of firm unconditional orders. In addition to this, we had orders worth roughly 1.4 billion, which has been rewarded but not yet contracted. And we also have future activities with an estimated value of 5.3 billion within construction partnerships. Finally, the JV category contributes with a value of around 950 million Danish kroner. In total, our order portfolio exceeds 20 billion Danish kroner and forms a solid foundation for our activities in the coming years. This enables us to plan and optimize our resource allocation, making us less vulnerable to fluctuations in the market. Please turn to slide 6, please. We have improved several financial ratios in recent years, and we maintained focus on cash flow and balance sheet in Q1. We reduced the group's net working capital by 594 million Danish kroner because we're improving our ability to collect cash and face our projects to quickly receive payment for our work. After positive developments in recent quarters, we saw a decline in cash flow from operating activities in Q1 due to tax payments and developments in working capital. The return on invested capital increased from 26% to 69% on the back of improved earnings and a reduction of invested capital. Finally, we reduced the group's net interest-bearing debt by almost 2/3 billion for a net deposit of 207 million Danish kroner. This improvement was driven mainly by a doubling of cash in hand to 821 million Danish kroner. Based on our relentless focus on cash flow and balance sheet, we are making significant progress and creating a greater financial headroom for the group. Turn to slide 7, please. We launched our Building On strategy last year, focusing on gaining strong traction in our market and delivering tangible progress on the sustainability and people agendas while generating profitable growth and sound returns. On the next couple of slides, I would like to highlight some of our most important strategic focus areas and how they impact our approach to the market and the prospects for future profitable growth. Turn to slide 8, please. Slide 8. On key focus areas and strongholds for us is strategic partnerships and integrated collaboration projects. We are the leader in this area in Denmark with years of experience for multi-year strategic partnerships with several large council housing organizations and public developers. Under these agreements, we cooperate closely with developers and other advisors on a portfolio of projects. In addition to the fully fledged partnerships, we have entered into large-scale framework contracts, dialogue-based and phased tenders, and we see an increasing number of projects with early involvement as well. 37% of group revenue was generated from partnerships and other collaboration projects in 2023, and we have won the first new partnerships with private companies as well. We currently have 10 multi-year partnerships with private and public partners. These types of collaborations ensure a higher level of robustness and contribute with increased stability and visibility. It's a great way to ensure efficient construction process and delivering projects on scope, on time, and on budget, and it reduces the risk of conflict. We haven't been involved in the disputes in partnerships or cooperation projects so far. Another focal area is the civil works and infrastructure segment of business in MT Højgaard, Denmark, which diversifies our portfolio and fosters greater resilience and stability in a challenging market. We aim to further expand in this sector following robust growth in recent years. This was most illustrated by the electricity grid expansion order announced yesterday and mentioned before, as well as our work on the Port of Rønne and the large Nordhavn tunnel project in Copenhagen. The activity in civil works and infrastructure is quite resilient and driven by public investments in the green transition, energy projects, climate adaptation, traffic infrastructure, and waterworks. In MT Højgaard, Denmark, we saw civil works and infrastructure accounting for 42% of revenue in 2023, and it is worth noting that a significant part of our activities in this area are done under joint ventures, which means that neither order intake nor revenue is reported separately in our accounts. On this note, please jump to slide 9, please. The next area I will point out is sustainable construction and refurbishments. We have been a frontrunner in this segment for years and are seeing increasing demands for know-how about recycling, waste reduction, materials, and flexible construction, among other things. The number of sustainable certified projects has increased steadily for years now, and 37% of revenue came from cases with sustainability certification or pre-certification in 2023. Today, certification is a key topic in conversation with developers. Tomorrow, it will be completely integrated and an actual part of all projects. We are targeting a significant 16% reduction of CO2 emissions in 2025 from the 2022 level and a 42% reduction by 2030. At the same time, we are focused on implementing the EU CSRD into our strategy to ensure compliance, continued progress, and a higher degree of transparency. With these perspectives on our key focus areas, let's turn to slide 10, please. As mentioned earlier, the Danish core business has generated growth and lifted earnings for 5 years now, and we are on track to make it 6 years. We have improved cash flows, return on invested capital, and other financial ratios in recent years. A fair share of the progress has been made on the back of a strong turnaround effort in MT Højgaard, Denmark, supported by a stable and high level of performance in the 2 other business units, even during COVID-19 and a slightly depressed economic cycle in the Danish construction industry. We have a broad foundation with around 300 current construction and civil works projects. The geographic distribution is good, with a mix of small, mid-sized, larger, and a few major projects. We are proud to say that we are the leader within multi-year strategic construction partnership with large customers, and we have strong position in other collaborative projects, refurbishments, infrastructure, sustainability, and construction works in general. The Danish core business is well positioned with a high order backlog, a promising project pipeline, skilled leaders and employees, as well as a strong exposure towards the most attractive parts of the market in terms of growth perspectives. Over the last couple of years, we have spent resources on strategic restructuring, and we are now parting with the business unit MT Højgaard International. This restructuring has taken its toll on the group results, but we are now reaching the very core of our business. We will focus entirely on developing our core business, which still holds potential for improvements. and new strategic initiatives will contribute to the strength of MT Højgaard Holding and our ability to continue delivering profitable growth. On that note, please turn to slide 11 and the outlook for 2024. We expect to generate revenue of 10 to 10.5 billion Danish kroner in 2024, and around 85% of this was contracted end of March. In addition, we have several orders expected to be contracted during 2024 and a continued strong pipeline. Earnings are expected to increase, with EBIT expected to reach a level of 400 to 425 million Danish kroner. This would be an improvement from 389 million last year, and we expect earnings to be higher in the second half of the year than the first half. All three business units are expected to improve slightly and increase margins. MT Højgaard Denmark is already improving, as mentioned before. Inga and Petersen, we are more dependent on booking new orders and improving execution. And in MT Højgaard Property Development, we expect to see the usual developments with earnings materializing towards the end of the year when projects are realized. We maintain our focus on profitable growth across the group with a clear emphasis on profitable. It is our ambition to increase earnings in the continuing activities for the sixth year in a row. Please turn to slide 12, please. Before I end this presentation, I just wanted to share a few points about the MT Højgaard Holding share. We are listed on Nasdaq Copenhagen and have roughly 3,000 shareholders and a market cap around 1.5 billion Danish kroner. In addition to ABG, the share is covered by an independent equity analyst at SEB and followed by Danske Bank. Our major shareholders include various entities and private individuals associated with the two original owner companies. In addition, several Danish institutional investors are represented in our ownership along with retail investors. Free float is around 40%. We are focused on creating value for our shareholders based on the restructuring efforts outlined today and through continued improvements of the core business. We are confident that these initiatives and continued strong performance in Denmark will unveil the value of our group and enable us to distribute excess capital to our owners in the coming years. It is our main priority to resume dividend payments as soon as possible. I now look forward to taking your questions on this call and any follow-up questions after this session. And please feel free to reach out. Let's turn to slide 13, please.
Thank you very much, Rasmus. And talking about the share, maybe we should stick to, let's say, one of the main drivers behind the share price performance and this sort of the financial performance, particularly the strong cash flow development. So if you look at it, last year you had a very strong improvement in cash flow due to your working capital process. Sort of looking at the headline figures for this year, if you maintain your guidance of 400 million EBIT, and let's say roughly 100 million out from the international operations, we are at 300 as a base starting point. Could you just talk a little bit about the pluses, the swing factors from 300 plus minus to give us a sense for what kind of dynamics and moving parts there are for the cash flow for this year, please?
Yeah, ever since I became CFO of the company, and I have to say I was the chief strategy officer prior to becoming the CFO, I've always been very focused on cash conversion. And this means I look at the financials horizontally. I'm very focused on the balance sheet, not only on the P&L. We expect to continuing this level of negative working capital we've seen in the past year and a half. That's our focus. We focus on face our projects better, Our work in progress is important. And this means that the way we face the projects, that we get money prior to doing the work is ideal for us. And when we then do the work, if we haven't had the money up front, it's important for us to bill the customers and get the money from the customers. But at the same time, we have a lot of respect for our vendors and we pay people on time. But we are very focused on our working capital. And again, our invested capital, looking at the other part, is also important. And this is where joint ventures helps us quite a lot. When we go into big civil works projects, we quite often do it with international big partners. so we don't have to invest big amounts on equipment, and that's another thing. So I believe that we will see the working capital we've seen last year. We will reach some point of steady state, a little bit below what we saw in 2023, but not far from. And if we look at the Q1 for 2024, we had a negative working capital of 650 million compared to end of 2023, where it was 669 million. So it's roughly in the same neighborhood.
Okay. Yeah. Thank you. So let's dwell on, let's say, just a couple of the sort of negatives that that market focused on in your Q1 report. The first one was the international operations, which surprised a bit. Could you just put a bit of flavor on that and just explain what we should expect for the full year and when that is recorded, if you can, at this point in time, nevertheless, and then sort of the outlook to sort of guarantee that that's out of the books, sort of.
If we look at it in Greenland, we have an electrical company, a technical company that we have up for sale, and we have dialogues with interested parties. I don't know how much money we will gain from this transaction, so I can't really tell. But in terms of MT Højgaard Greenland, where we only have one project left, that will be done this year. We have seen an unfortunately loss in Q1, but that was because we had to force the work on the projects, and that cost us money. We will continue losing money. I think we had, I know discontinued business for Q1 was -68, and I think it will be more than 68. I cannot fortunately promise that, but it will be less than we had in 2023. What I focus on with the international businesses, I'm very happy that we have actually decided to sell it, because it was actually diluting the very, very good Danish business. And now we are in the core. We are in a market, that's the Danish market, where we have some competences. And we are working in the core. We look at the adjacent business, and we have a focus on new business, but the main issue is core business and adjacent. So that's why. But we will lose money on international.
The second item was sort of the relatively low order intake. I mean, you've already spoken about the very high comparison figure from last year. But I think the interesting part here is sort of the dynamics in the market where you are staying away from what is perceived or what is a very tough competitive situation in Denmark. So two questions on that for the audience. One is, of course, the focus on your order book quality, which also hits the order intake, and then a brief, description of the outlook and the market situation in Denmark currently.
Yeah. First of all, having a solid order book, it gives you some kind of freedom. And a key thing in our company is financial discipline. I think discipline is key for a construction company, or it is for all companies. This means that when we look at orders, we don't go low. We are very selective in what we order or in what we bid on. In terms of what type of business it is, it has to be attractive for us, and we have to have the ability to win and earn money on it. And this means that we are very selective, and that's one reason why we have seen less order inflow this quarter. Of course, we can't continue being this because then we will cannibalize on our order book. But we are very, very careful. And the good thing is we're working on our cost base, so we become even more profitable or even more competitive in the market. We are looking into an interesting market, especially the civil works. It's very, very interesting markets. It's a little resilient towards the fluctuations in the economy, because we see a lot of its public funding. And we have established us and have a fairly good position in that area. So we see the market, we see it positive. Also, the partnerships we are engaging in are really giving us a solid ground on our financials. So to some extent, a little positive on that note.
Thank you. And if we sort of look a bit ahead as well and stay on the Inga and Petersen division, which is highly involved in renovation work.
Yes.
Could you just give us your sort of high-level views on the impact of the EPBD, the European Performance of Buildings Directive, which was approved last month in April, and what you sort of see that having an influence on your business, and what you see that it takes for it to actually have a real impact in the market and for you to benefit from that?
We are actually we are a quite big company, and we follow all the guidance coming from the EU. And being a public company, we are getting hit first by all the new initiatives. We see it as a good thing, and we believe. I'm so sorry. I have an alarm going right now. Sorry. We do see it. Sorry. We do see the directive as a positive thing, and for E&P with all the refurbishments, we are quite confident that they can actually turn it around to something good. Inga and Petersen, as I said, need orders, and that's because E&P is very strong in partnerships, and we have unfortunately seen in our partnerships some delays because it takes a longer time. We do have the order. It's just it takes a little bit of time to executing on the actual order and get it signed so we can actually begin the work. So I don't know, Peter. I'm sorry. It's because I have an alarm in my right ear. I'm sorry.
No problem. I guess we are also actually reaching sort of the top of the hour here after 25 minutes. So unless there is a spot comment for question from the floor, then I think we will. And I guess there isn't, so I think we will stop here. Rasmus,
thank you so much.
You have to move forward to another meeting, but nevertheless, yes. Thank you very much for taking your time to participate, and we are very happy to see you, and look forward to follow up on the MT Højgaard sometime in the future.
That sounds great. Thank you so much.
You.
Have a good day. Bye.
You too. Cheers. Bye-bye.